If you not know how to spread your risk, you will always stay poor, because it's like trying to run a marathon without knowing how to walk. In the lesson today, I will show you how to build and manage a successful portfolio. You could use this technique for any other investment. So my advice is to listen carefully, because it's really essential for your trading. So how to build the successful portfolio is to spread your risk. So the first thing is diversify, diversify, diversify. I can't stress it out enough because it's so fundamental. To build a successful portfolio, you have to spread your risk between different assets. So always remember, don't put all your eggs in one basket, like Warren Buffett said once. It's very, very important. Otherwise, you lose your money if you try to get the perfect stock to win a lot of money or find the best investment. Looking for many good investments, and deep down you make a lot of money. But why is it so important? It's so important because you have to spread your risk, because different trading strategies, styles, time frames in asset class, and overall you have the much higher chance to make money in the long term. Stop expecting to make money in a very short time. So for example, with ZuluTrade, the asset classes, don't invest only in one currency. If they're only investing in the euro, US dollar, and you have 5 traders, they all invest in the same currency, you have a big problem, because the risk is very concentrated. And if they're all losing or there's happening some external effects, your whole portfolio get crushed. So diversify between euro, US dollar, Great Britain, US dollar, and mix it together to get a great diversified portfolio. And also the time frame. Looking for long-term traders to buy and hold strategies, looking for the short intraday trading. This is very, very important. Also, you should avoid scalpers with only trading in time frame few seconds. And also the performance is very important. So mix between high risk and return with low risk and return. So if you like to follow a trader who have very good profits, but his risk is very high, combine him with a trader who have lower risk, not making that much money, so your risk overall get concentrated. I show you that in a small graphic. So what I meant, it's mean to find the right balance. So there's always a connection between your risk and your return. So if you have a high return on the right side, you also have a high risk most of the time. If you have only a low return, your risk is most of the time very low. So you try to get on this front line. It's called efficient front line. This line is the best. Okay, if you find some opportunity someday in a different universe where you can get a return without a risk, take this opportunity. But most of the time, I can tell you, there is always a proportion risk-return. So this is a basic rule. Risk always related to your return. Be careful, don't trust everybody. There are systems out there who could make a lot of money for the trader, but not for you. So they're doubling their trading size with every loss, the multi-goal system. The performance only based on closed trades. So there are many open trades and they're losing and they start to hedge it. So for example, they buy the euro US dollar and let's get a losing position, and then they sell it at the same time. So they balance the loss against the win. Another problem is the survival bias. Many traders open many accounts on a demo basis, and they try to get in the top of the performance table to get a lot of money following them, and the other accounts not interesting anymore and they're losing money with them. And also the top account, the most of the time, get a lot of attention, and after a few months they lose it all. Another problem is avoid high slippage. I told you there's a difference between the trading signal and the signal execution in your account. So what you have to do is looking for a small slippage. And there are some providers who give you a better slippage, for example, the AAFX, which I recommended in the last video. But if you don't would like to open an account with that firm, you can also look for some other companies who could do the same for you or a little bit higher slippage. Another important point is to check the past performance of the trader. Don't get involved into statistics too much, because you can fake any statistic in the long run. Only believe statistics you only fake. Let's take a look for some examples in ZuluTrade. Here's the first example. We see a trader who had good results in the past, making a lot of money over 2 and 3 years. But what's happening then? Yeah, he lose it all. because he start changing his trading style. Yeah, there's some special warnings: reckless trading, warning, high slippage, inactivation, and yeah, it's very crazy. He tried to revenge it and he tried to get it all back and losing it all. And you also can see this guy had more than one account, 3. So he's tried to get in the top, make a lot of money, hit and run. Yeah, in the end, a lot of followers lost a lot of money. If you look at the live followers, okay, there are some people made some money, but if you look at the loss much bigger than the profits. So we have to be very careful with this kind of trader. And here we see the slippage. Yeah, and you see here the slippage is up to 3 points. And here you see AFX is most of the time the best. And there are other brokers who are quite close to that slippage of AFX. And another example is this guy. He was very good. I think at the top time 2 or 3 million will follow him, or maybe even 5 million. I don't know it anymore. But you see, he was very good in the beginning and he got a lot of attention. He joined the top 10 Zulu performance table. But then he had such a big mass following him and he makes such a big money of that. Just people following him. He started changing his trading style. What he had done, he just trade for his own money. He's not trading for profit anymore. He just made trades to be safe and get the commission from the brokers. So you have to be careful. If there's a good trader and he's changing his style, you better stop following him, set him on hold, and observe him. What he's doing there. Is there something going wrong in the performance? What's going on here? And you can see here he starts making a lot of losing trades. Yeah, he loses 200. This is crazy. You can't live long with that in your trading account because you're going to lose. But there are also good traders. Let's look into a good trader you can join in your portfolio. This is one of my favorite guys. This is a good example. So you see, he made constant grow, not too big, only 5,000 in a few years. There are traders who are making 10,000, 20,000 pips in a few months there, and everyone is following them and they make a lot of money from the commission, but not from trading. And yeah, he made decent winnings. The winning ratio is very good with 83%. The drawdown is not too high. It's close to our range, 500 pips, which I told you yesterday. The slippage with AFX should be very good. Yeah, it's very small, 0.06, so it's quite nothing. You can live with that. This is an example for a good trader. Now let's go back to the presentation where I have some more details how to manage the portfolio. So, more information about managing your portfolio, when to cut a trader. First, change in the risk management. They started making bigger position, larger position, open more positions. So I like to limit the trader with the maximum open trades. Otherwise, he's open 20, 30, 50 trades and I'm losing all my money in a very short time. The next point is change in trading behavior. Is the frequency changed or increased? We saw the trader new wife, what he have done. He traded very good. And then he changed his frequency. He opened more positions to make more money. So he changed his complete style. It's red flag. The next is fear of taking another loss. They made such a big loss and they stopped trading, which is very good. You can deactivate this trader and look for them in the future. Maybe they start again, wait for 2 or 3 weeks, what's going on after a big loss. But there are other traders who try to get revenge. They lose a lot of money and they lose a lot of money following them and they get crazy. They would like to come back to the top and they start ridiculous trading, open more trade to get back on track. Yeah, this is the erratic trading. Contrast, trying to win back the losses, taking such a high risk, and you saw it. This was the first trader who started erratic trading and lose it all. And also the trade management. Did they tell you they have a stop loss of 100 pips? And now, after a few months, they start stop loss 200, 300 pips. Possible they get fear or they are greedy because their performance getting worse. So we have to be very careful. So my general advice, you should monitor the traders very closely. Look what happened if they made a big loss. Look into the past performance analyze the stop loss, how big they are. This is very important. So guys, keep this in mind. Red flags for a change in trading is change in their risk management, change in their psychological trading behavior, and change in their trade management. These are the red flags. If you see that in a trader, immediately stop following him, put him on hold. But in addition, I can tell you, don't switch too soon. If you're jumping from one trader to another, you get in the doom loop. Because there are good traders, and even good traders making losses sometime, because you can't expect to win 100% of the time. So it's very crucial. If you see red flags, stop them. But if you search for them very carefully, put them into portfolio, give them some chances to make some money for you. Alright guys, now I need your help that I can give you more videos and make this course better, that you become a successful trader. Just tell me, what is your biggest problem in trading? How can I help you? For these questions, I made a quick survey. This takes less than 3 minutes, and with that information you provide for me, I can give you back more valuable material. You just click in the upper right where you find the link to the survey, or the link below the video. And tomorrow I reveal the success formula, how you can separate yourself from the 95% losing traders, and how you can join the top 5% of winning traders. So I see you in the next lesson. Goodbye.